and welcome to the weekly news review from Bloomberg New Energy Finance. I am Victoria Cuming, Insight Editor. Today we look at the recent burst in renewable energy deals. The Japanese trading house Marubeni Corporation is having a busy summer. On the 5th of August it announced it agreed to buy at least 25% stake in Ireland's mainstream renewable power. The $133 million deal will make Marubeni the second biggest shareholder in the company, which has developed over 19 gigawatts of solar and wind projects in 7 countries. Yesterday, the Irish Times reported the Japanese conglomerate could receive additional shares if Mainstream does not sell its North American business before 31st of March next year. The purchase will be the largest single equity investment in Marubeni's history, but will not be its first foray into Europe. It already has business interests in the offshore wind industry and the electricity supply business. On the 18th of July, Marubeni chairman Teruo Asado told Bloomberg News, "Our target is Europe and a big increase in the US and entry into South America for the IPP business," referring to the independent power producer model. European energy firms are under pressure from lenders to sell part of their assets and have made offers to Marubeni, he said. On the same day, GDF Suez announced it would sell a 50% stake in a 3.3 gigawatt package of fossil-fueled and renewable power generation assets in Portugal to Marubeni. The sale will reduce French utilities' net debt by €900 million after the venture is consolidated into its accounts on an equity basis. GDF Suez is cutting capacity to cut costs, having been hit by lower demand for gas-fired power in Europe. This issue is not confined to this utility, however. Power companies across the region have announced plans to divest or mothball underperforming plants. In July, for example, E.ON announced it would mothball a gas-fired plant in Slovakia, just 2 years after it started operating. Nonetheless, investors still appeared to be interested in buying up power assets in Europe, in particular for reduced prices from cash-strapped utilities. On 23rd of July, trading house Vitol concluded the purchase of Britain's largest CHP plant from Philips 66 Power Operations. In late 2012, EDF Energy sold its 819 megawatt Sutton Bridge gas power station in the UK to a group of investors led by Australian bank Macquarie. The Mainstream acquisition was not the only renewable energy deal this week. On Thursday, Brazil's second biggest utility, CEMIG, announced it had agreed to invest $621 million in renewable energy developer renewable-energy to boost its exposure to wind power. Other Brazilian utilities such as CPFL Energia and Tractebel Energia are also seeking to focus more on wind power, as this technology complements Brazil's reliance on hydropower. During the dry season, when water levels are low, winds in the region are at their strongest. CEMIG will be part of a controlling group that will own at least 51% of renewable-energy once the deal is complete. The purchase price at $22.32 a unit represents an unjustified premium of 25.6% over the preceding day's closing price, according to a Citigroup report published on the 9th of August. The premium is 60% over what Citibank values the company. In solar, Ireland's BNRG Renewables sold a 20 megawatt project in southeast England to Lightsource Renewable Energy after it won planning permission. The UK's biggest developer and operator of solar parks said the project will be built in Kent for €35 million and will be one of the largest in the country. This is not the first acquisition for Lightsource this summer. In July, it bought the 12.5 megawatt England PV portfolio from Germany's Dewey, and in May it purchased a 6.3 megawatt Southampton PV plant from Solar Century Holdings. Lightsource is implementing its self-titled very aggressive strategy even after subsidies were cut in April. "We aim to develop well over 200 megawatts more and reach about 500 megawatts by this time next year," the CEO told Bloomberg News on the 16th of April. In Germany, Vattenfall acquired 10 PV plants in the east of the country for some €60 million. The completed installations have some 48 megawatts in combined capacity. The Asset Solar Manager has bought more than 60 solar plants in the largest EU member states since 2004, according to its website. Across the Atlantic, Colorado-based Real Good Solar has agreed to buy New York-based Mercury Energy to pursue East Coast customers. Real Good has seen its shares more than triple this year. They surged another 15% to $2.39 on the day of the purchase announcement. Mercury generated $35 million in sales last year and has some $10 million in cash and no debt. Unlike renewables, however, the nuclear power industry has not enjoyed a sunny week, in particular in Asia. On the 5th of August, the Tokyo Electric Power Company, known as TEPCO, released estimates on how much radiation-contaminated water has leaked from the nuclear plant in Fukushima. The first such data the operator has released since March 2011 indicated that 20 to 40 trillion becquerels of radioactive water seeped into the Pacific Ocean between May 2011 and July 2013. According to TEPCO, the leaked volume was comparable to the maximum level allowed under safety regulations of 22 trillion becquerels a year. TEPCO's reputation has taken a battering, however, as workers at the plant told ABC Online at the weekend that the plant operator has always known about the leaks, and they do not trust it to handle the situation. Japan's nuclear watchdog has described the leaks as a state of emergency, having previously said that it had doubted TEPCO's continued claims that the toxic water is contained safely in the facility. Last Thursday, Japanese Prime Minister Shinzo Abe said the government would take firm measures to contain the leak. And in Taiwan, authorities said on the 9th of August that a water leak that began 3.5 years ago inside a state-owned nuclear power plant is yet to be halted. The water may have been radioactive, according to the watchdog called Control Yuan, though the plant operator said the water did not come from storage pools. Nuclear power is controversial in Taiwan, so controversial that a fight broke out in the parliament on the 2nd of August, ahead of a vote on whether to hold a referendum on completing the construction of the island's controversial 4th nuclear plant. Nuclear currently accounts for 1/5 of power supply on Taiwan. Meanwhile, in South Korea, the government is urging efforts to save electricity as the country faces shortages after nuclear shutdowns earlier this year. Power demand over the 11th to the 13th of August is expected to peak at 80 gigawatts between 10 a.m. and 6 p.m., exceeding the nation's 77 gigawatts of generating capacity. 2 of South Korea's 23 nuclear reactors were halted in late May, and the restart of another was delayed after authorities found that safety certificates had been faked. This has been the weekly news review from Bloomberg New Energy Finance. I'm Victoria Cuming, Insight Editor. If you'd like to find out more about investment in clean energy, carbon markets, water or power, please visit our website at www.bnef.com. I hope you could join us again next week.